Hello everyone, today is March 18th, 2013. Thanks for joining me today on the Moneybag 73 channel. Over the weekend, we were having bank runs in a small island off of southern Europe. In Cyprus, we had people withdrawing their paper nothings before they were going to take a haircut on their deposits. You see, there's bank failures happening on this small island of about 1 million people. But the deposits in the banks there is about 8-to-1 ratio of their GDP. So, you know, a lot of offshore money stored there. And the debt to GDP ratio there is 70%. So, you know, we're over 100% here in the US. Japan's 200%. You know, there's a lot of countries that are worse off than that, but we're having problems there, and the reason this is significant is because for the first time, the ECB is requesting depositors to pay up for the bailout. 6.75% haircut, I believe it was, for anyone with under 100,000 euros in the bank, and 9.9% with anyone who's been able to save over 100,000 euros. There was supposed to be a vote. There's a bank holiday going on, and they can only get 33% of the vote, so the banksters are going to hold off, I guess, until tomorrow at 4, but that could be postponed till Friday, until they get enough votes to get the vote that they're looking for. So this reminds me of being a kid and being told that if you play with fire, you're going to get burned. Well, in my opinion, keeping a large amount of your savings in the financial system is playing with fire. With the current state of affairs we have in the world, with central banks printing money with no end in sight, everything has been covered here for the last 2-3 years. I bet many of the people in Cyprus wish they'd seen my video, or I know Greg Manarino's done one also, on being your own central bank. Having your savings in your own hands. If those people there were their own central bank, it wouldn't be an issue. But it is an issue because they're being expected to take a haircut on their savings, on their life savings. It's just totally unbelievable, but you know, I believe this is where we're headed. You have to be your own central bank. And even if they had gold and other types of accounts, you know, the gold's not being touched. It's the deposits they have in euros or whatever other currencies. So very interesting, very sad for those people. I did see an article come late that said that, you know, they're tossing around the idea that maybe 0% will be expected from anyone under 100,000 euros in deposits, and over 100,000 you'll have to pay 15%. So a lot of the rich Russian people that have money there are going to be having to help out with this bailout. I think a lot of this is political, but it just shows that, you know, your money is not safe in the bank, and these people will find that out. I mean, if you live in Spain or Greece or Italy, I mean, could you be next? I don't know. I know a lot of money is going to be running out of that little island there and the banking system there. So we'll have to watch this unfold. I mean, this is kind of scary thinking about where this could lead. But, you know, there's people that are happy with the stock market all-time highs and think that everything's under recovery mode. You know, I probably could have made more money if I had invested in other things in the last few years. But most of my savings is in silver, and I feel safe. You know, I can pick it up and throw it up in the air anytime I want. Have the kids help me pick it up off the ground. But can't do that with electronic digits in the bank. So there's a thing with insurance of knowing that you're secure. And it's just a good feeling that comes along with knowing that what you have, you can hold it in your hands, and having no counterparty risk to the wealth that you've worked for and you want to pass on to your children. This is just where we've gotten to, everybody, and I can't imagine people have so much trust in the banks these days. But anyway, I'll end it here, and I'll talk to y'all soon.